Hey everybody, it's Rob Booker here, and I want to do a week preview report here, sponsored by IGUS. IGUS is a leading Forex broker. Let's take a look at the economic calendar. So here's the IGUS economic calendar. There's two main items on this calendar for the week. The first one comes early on in the week, and it's the Bank of Canada's interest rate decision. And we're going to take a look at the Canadian dollar in just a second here, and we're going to see how we do. This is going to be a big one to watch this coming week because interest rate decisions are always big movers. But more importantly, the Canadian dollar is setting up a classic technical pattern that we've got to take a look at because there is the potential for a move that sets the tone for the whole year. And that's why I put on my suit coat, especially for this video. Next, of course, we have the granddaddy of them all, the big one, the big cheese, the one that calls the shots, the one that everybody looks for, the one that everybody talks about. And this will be the biggest economic report in a long, long time. It's the non-farm payroll report. But what makes this a big one is it's coming at a time right before a giant impeachment trial in the US, and that is substantial. We're going to be paying really close attention to how the strength or weakness of the US economy balances all of the political instability going on right now. So let's take a look at a couple of financial instruments. Why don't we take a look at the British pound US dollar for the purposes of looking at the dollar and looking at the non-farm payroll report. And this is particularly interesting because, of course, Britain is set to leave the UK in January with no deal. Plus we have the non-farm payroll report, and plus we have the impeachment stuff in the United States. There's a lot going on here, and there's a technical pattern. You ever heard the phrase, the technicals lead the fundamentals? Well, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. However, this is a somewhat classic or modern version of the head and shoulders pattern. So with this as a shoulder, this as the head, and this as a shoulder. And if we break down below $1.28 on the British pound US dollar, that would be on the strength of a jobs report and on uncertainty and political instability regarding a no-deal Brexit. That could set the tone for a move equal to the distance between the head and the neckline, which takes us down to potentially around $1.22. And that could happen in short order. We're talking about moves that could happen within 30 days, within 60 days potentially. Now, the counterbalance to that, the other side of the coin here, is a move above $1.33, and that's the counterbalance move. And if we move above $1.33 on the British pound US dollar, that's potentially a weak jobs report or a no-deal Brexit that's not really that big of a deal, and then the pound strengthens. If we break above $1.33, we're looking immediately at $1.35, $1.36, and if those levels are broken, then that's a trend continuation here on the British pound, and that could last for a really, really long time. So let's skip over to the US dollar, Canadian dollar, because that's the one I want to look at with regards to this interest rate decision that's coming next week. And we've got the same kind of technical pattern setting up. And if you believe that the technicals lead the fundamentals, then remember, all trading involves loss, and past performance is not necessarily indicative of future results, but you've got a shoulder here, a head here, and a shoulder here, and we've already broken, ladies and gentlemen, the neckline. And that neckline, once it's broken, we've already made it halfway the distance that we potentially could make it. So we're at this really critical stage right here where we're either on our way down to $1.26, which is down here. That's the measured move. That's the next distance lower. Or if there is some kind of unexpected reaction to this interest rate decision, we could be looking at a return to and a retest of that neckline around $1.34. But that's where traders would potentially be looking for a reversal. Theoretically, if we could get a move to $1.34, which is 500 pips, so that's a big, tall order. If we could get that move, that would be probably a really great area of supply, meaning that would probably act as resistance. That could potentially act as resistance. So look for maybe in the interim $1.32 to be hit potentially, and then wait and watch for, is my plan of action, for that move all the way up to the neckline. Now, however, if we break below $1.29, that sets the stage for a move all the way down to $1.26 potentially. And I think that's what traders would be expecting if we break that level. All right, so I'm super excited for this coming week. I'm really excited. I got a ton of new videos coming out. You're probably seeing a bunch of stuff on Facebook and other places, so watch those videos. Check your email inbox because I got a ton of really important emails dropping into your inbox. And if you liked the video, leave a like. And if you love the video, subscribe to the channel. I think we're right around 50,000 subscribers now. And in 2020, we're going for that 100,000. And that means I want to bring you a ton more super valuable content that teaches you what I'm thinking and maybe some ways to look at the market in new and different ways. I'm Rob Booker, and I'll see you next time. Bye for now.